As you read on your course page, today's assignment has 3 parts. First of all, I asked you to watch again the video from last Friday, actually the second video from last Friday, talking about cost of goods sold. I want to expand on that a bit, give that a bit more detail, and that's this video that we will be dealing with for the next couple minutes. That's step 2, and step 3 will be a short problem that will follow on your course page. So let's begin this video. What I'm doing is based directly from the video from last Friday, the same type of transactions and the same amounts of money. And on your screen you see what are termed T accounts. We've looked at this one time before, I believe. We haven't used it too often, but often in accounting courses and in accounting textbooks, you'll see that certain transactions are explained by using T accounts. This is a very skeletal version of the journal, usually the journal and the ledger, and just to demonstrate the debits and credits of a particular transaction. So I don't want this to confuse you. It's actually very simple. For example, the first transaction given in the video from Friday was a purchase of cell phones. This is a company that buys cell phones and then sells them for a higher price. So they use cell phones as their inventory. So when they purchased, I believe it was 100 cell phones at $50 a piece, the transaction would be this one, a debit of 5,000. 100 cell phones at $50 a piece is 5,000. And inventory, which is an asset, is debited. They have now more cell phones to sell. And cash is credited by the same amount. We spent 5,000, so cash, also an asset, is decreased by that amount of money. So that's the very simple way of demonstrating that transaction. Now, what I want to do today is to take the same transactions that were demonstrated in that video and put them into actual journals and ledgers, as we hopefully by now are accustomed. At the bottom of this screen, you will see once again the tabs that we've used many times before, and we will go to the journal page, and there you see the general journal for the cell phone store, and the 3 transactions are illustrated on the right. And these are the same transactions that you had in the video on Friday. So let's put them into, first of all, the journal and then post to the ledger. So the date is for 2017, and the debit is to inventory, as we just saw in the T account. That's the name of the account. We bought cell phones, but our account name is inventory. And we debited, right? Because we now have increased our inventory. The credit goes to cash. We spent cash, and we spent $5,000. And this has a little line down here for an explanation. And we bought cell phones, which is inventory, check number 101. Okay, very simple explanation. So that's the journal entry. Now we need to post that. So let's go to our ledger, and that was for 2017. I'm posting the credit part first. Doesn't matter which one you do first. And the journal page was what, page 4. So J4, and we credited $5,000 cash. We debited on that same entry on 4/20. Inventory of $5,000, and that was journal page 4. And let's put our reference numbers in. Inventory is 103, cash is 101, back in the journal, inventory, in the reference column 103, account 103 and 101. So you've done this kind of thing many times. So that's how that actually looks in the journal. In the T account, it was very much of a skeleton version. In the actual journal, is actually the same thing. Inventory is debited, cash is credited. So that's the first entry that was given to you in the video from Friday. Let's do another one. That was April 30th, the second entry over on the right side. We sold 90 cell phones, 150 apiece. So if we sold cell phones, we gained cash. So now we're going to debit cash by how much? Well, we sold 90 at 150 each. That's 13,500 if you multiply that out. And because we got money, cash was debited, and the revenue account could be called revenue. We often call it sales. Is a revenue account, and it increases on the credit side. So we sold cell phones at $150, whoops, each. Okay, so there's the two entries, and those are fairly common. So let's go back now and post those to the ledger. We go to cash. Now cash on April 30th is debited. Journal page 4 is debited by 13,500. It went up. And we need now to go down at the bottom to the tab to the revenue. And now we have sales for 3017. Again, J4. And it's credited because we now have more revenue. So 13,500 in sales. The account number for sales revenue is 401. Cash, as you remember, is 101. So we go back and put our account numbers into the reference column, and then that is posted. So again, a very simple two entries there. Now the third one, again, I want to review with you. This is the new one. This has to be done with sales as well. It could be done every time you make a sale, could be done daily, could be done weekly. Often it's done at the end of the accounting period, at the end of the month, for example. But we need to account for the fact that we got $13,500 from selling cell phones, but it's not going to be all profit. We have to understand that we now sold part of our inventory. So this is the new transaction that was talked about in the video on Friday. So we now have to use a new account. It's actually an expense account that we haven't had before. It's called cost of goods sold expense. And that will account for the money we spent for those cell phones that we sold. Up here, we sold, I believe I said 90 cell phones, correct? So if we sold 90 cell phones, that means that we have to debit the cost that we had paid for those 90 cell phones. So if we sold a cell phone for $150, that's not the profit. We have to subtract out what we paid for that cell phone. And we paid $50 for each cell phone. So in your entry here with cost of goods sold, we have an expense of 90 cell phones that we sold, and maybe we should have put in our little explanation up here, we sold 90 cell phones. Okay, we sold them at 150, but they cost us 50 each. So 90 times 50 is $4,500. So this is debited $4,500. That's the expense that we have associated with that sale. And now the credit goes to inventory because we have fewer cell phones on hand. So debits have to equal credits. So we now have reduced our inventory by 4,500. So let's post this one. This is an expense account, cost of goods sold expense, and we go to that, and I put this in for you. We have now an account for cost of goods sold, and this came from journal page 4, and this is a debit of $4,500. This is an expense, and it's expense, in this case 501. Go back to the journal, put in 501, and then we go to the inventory account, which is an asset, and we credited the inventory by that $4,500. Again, it came from journal page 4. And if you look at your inventory account, we had a debit of $5,000 in cell phones. We've sold 4,500 of them. That means we only have $500 worth of cell phones left. So we may have to buy some more inventory. But that's what that now shows. Our inventory has been reduced by that amount. So that was account 103. And those are our 3 transactions. Now, the final point in the video on Friday said that all of this ends up on the income statement somehow. We're still not quite there yet, but I want to give you a quick example of what that looks like. If we were to make an income statement, very simple one for the cell phone store for the month of April, the revenue part is what's important. This part right here. Revenue, total sales, 13,500. The cost of goods sold is subtracted. It's a $4,500 deduction, which means your gross profit now will be shown as $9,000. So when the owner looks at this, he or she has a better indication of how we're doing, what we sold, and how much those goods cost us that we sold, leaving us with a gross profit of $9,000. Then we subtract other expenses that we might have. Those could be any number of other expenses, giving us a net income at the bottom, or a net profit, means the same exact thing. Shown here is $52.25. But the important part is we've added this part to our income statement. At this point, I'll ask you to go back to your course page and complete the problem indicated there.